Hello traders, how you doing? Welcome to another episode of My Talk Finance. I'll talk about finance, business, and investment right in this course in this YouTube channel. And if that's what you're interested in, I want you to share. I want you to like the video. I want you to subscribe. I want you to also click on the notification bell so you can be part of those that will be receiving our weekly video. We send videos on trading opportunity, investment opportunity, business opportunities. We also share ideas on how you can be financially free. And in today's course, by the way, I'm a professional trader. I manage funds for people. So I'm that professional, profitable, multi-billionaire investor and fund manager. Right? You say what you want to become. Okay, so this week, this week here, I took a trade on US oil, and I'll be giving a breakdown of the reason why I took that trade in this session. So I want you to pay attention, see how my trading psychology is built and what built my decision making in terms of trading. And you'll be surprised how this little video might change your entire trading career. Cheers, and let's begin. Okay, first of all, I I want to show you my trading view screen. Right, this is trading view, and of course you can see that is a live account. My broker's name is Owanda FX. It's a live account, and this market right here is US oil. Say Brent US crude, right? But US oil, and but I want to take you to the left, to the right part of my screen, so you just see how I build my trading view arrangement. So this is majorly the combination of all the major currency pairs. I've talked about major, minor, exotic currency pairs in this course, so you should do well to go and watch the video if you have not watched it or if you don't know it. So this way I arrange my currency, and down below it I have cryptocurrency. This is some of the cryptocurrency I have assets in. I invest in this cryptocurrency. I don't trade cryptocurrency. Yeah, I may trade them, but I trade them based not on live account, probably on demo, or I can just use an imaginary trade by placing like what we have on this trading view here. This whole trading action I'm showing here. The green part is when the trade is in profit. If you see it towards the red part, it's telling you the trade is losing, right? But that's just basically what I do in this cryptocurrency. To If I see a strategy that might suit for me to sell, I just place an imaginary sell and I look at it. Wow, it played out, blah blah blah. And in BTC, I actually took something like that in BTC, but I'm not showing you that today because it's not my focus. All right. So I also divide it into commodities: oil, gold, and silver. Then stock. Yeah, I place the indexes majorly, not necessarily stocks of companies, but index is the S&P 500. Yes, because I have an investment in the S&P 500. I invest with Vanguard, and also talk about index investing in this YouTube channel. So if you want to know much about this stuff, you should subscribe so you can be part of it. And you'll be surprised these little things is what make the difference in an investor. All right. So that's just how I arrange my trading view platform. So you could do yours that way. Okay, now the reason why I sold US oil. First of all, I want you to know that this market is a trending market. And we have two types of trend. We have the bullish trend and the bearish trend, right? And I'll draw it. Where's my brush? I'll pick my brush, I'll draw it so you just have a view of what I mean by that. You can see that the market, yep, it came down. Yep. And the market is selling. In other words, this is what the market did. This is what the market did, in other words. So this is a trending market. And one of the characteristics that make us know if a market is a bullish trend is what we call trend law. And the trend law for a sell is making lower highs and lower lows. Lower highs and lower low. This is a high, right? This is a low. This is a high. And this is a low. This is a high, and of course it's trying to form another low. Now, said lower high and lower low, lower high and lower low. So this is a high is higher than this place, so that's why we call this. This is a high and this is also a high, but this high is lower than this high. That's why this is called lower. I'm just trying to use my pen to manage it. This one is called, this is called lower high, and this is called lower low. I just believe you have an understanding. So this is high, this is also high, but this is lower than this, one is called lower high. This is low and this is low. So you can call this lower low, but this is lower than this low. And the reason why you call this lower low is possibly because the market moves something like this. So you call this lower low, you call this lower low. Same thing like that. So basically that's what it just generally implies. 2 seconds, I have to clear out this whole stuff here. Okay, 2 seconds. All right. Okay. Okay. So that's just exactly what it means. So you have an understanding of what the trend law for a selling market is. So that's one of the first reasons why I took a sell. The market is a selling market, or the market is a bearish market. That's the first reason. Now the second reason is I have an analysis called a top-down analysis, and I make this analysis on the higher time frame. I make it on monthly and I make it on weekly, which is the blue lines you are seeing. So at some point, the blue line is the support level, and at some point the blue line becomes a resistance level. And let me give you an example of what I mean by that. So you can see that the blue line here is like a resistance level. So the market got to this level, it came down, it's almost approaching the level, it's coming down, it's approaching, it's coming down, it's almost approaching the level, it's coming down. But it got to a point in time, the market broke this level, it came back to retest. So this blue line becomes a support level, and up it goes. Now we can see, if I can show you other parts, now you can see here the market is a resistance, right? So it came here, it was rejected, it came back here and it was rejected, it sold, right? So this line, this blue line here, is a support, because the market came here, it could not break below, it bounced back up, it came back to retest, bounced back up. Now we can see the market broke above, retested it, and it's going up. So that's exactly what I mean by the top-down analysis, just area of where there's market momentum. I mean, the market is struggling. The forces of demand and supply are struggling in that region. That's why it's becoming a support level and later becoming a resistance level, right? So we could see that it broke above this level, right? That's the first thing. It came back below the blue line, which was before a support level, and now is now a resistance. The market came here and retested it. It came back again and retested it, meaning it formed something called the double top, right? It almost formed something called the double top. And this might be clear if you go to the lower time frame. Let me just highlight it and let's look at it on 4 hours. Let's see what it looks like on 4 hours. Let's see what it looks like on 4 hours. Where's 4 hours here? So on 4 hours, okay, yeah, this is what it looks like on 4 hours. You can almost see it to be a double top, right? You can see it's just like a little different. So sometimes double top does not necessarily mean it's exactly double top. It's exactly double top. Sorry about this. It does not necessarily mean it's exactly double top. It can just get close to that level. So you can see that it came and touched again. Okay. Go back. So that's one thing. So it tested it. Some trader can start selling from this level. It has gone to retest. So it has broken the blue line. It tested it, then it's time to start selling. And of course, if you are selling, I'm sure you'll have made significant amount of money or profit. Imagine you sold from here. Imagine you sold from here, right? You sold from here, you place your stop loss here, and you take the market down to this level, right? You've made some good profits, if I'm not mistaken. You've made some good profits. So this is it. So if you are selling at that point in time, of course, some traders sold, but I didn't sell, or probably I didn't see that opportunity, or it's not part of my strategy, which could be why. Yes, I would have sold if I saw the market, but I didn't see it, which is why I could not take the opportunity. And also, I have a lot of variables I put in place before I make my trading decisions, right? So it retested one, This is another level. So it came back again to sell again. I mean, it came, it tested, fall, went back. It's called a corrective move, an impulsive move and a corrective move. That's what it's called, impulsive and corrective. Let me put in my chart, my alphabet. Okay, it's basically called impulsive move, impulsive move, and corrective move. That's what it's basically called. Okay, right. Impulsive and corrective. Impulsive move is when the market is moving within the direction it ought to move. For instance, it is selling. That's an impulsive move. In a selling trend, that's an impulsive move, right? Now, corrective move is when people are taking their profit out. That's what usually happens while a market corrects. So some people have made profit. So in other words, in trading, when you sold, right, and you are now closing your trade, it automatically means in the broker platform that like you are buying. So you've sold, now you're taking back your profit out. So that's exactly what this means. So the moment you are closing your trade, the volume of that transactions of those that are selling, the momentum of the sellers begin to reduce. So the buyers start taking over. That's why the market corrects at this point in time. That's why the market corrects. Now, the sellers resume. It's not a good time for them to come back again to buy. So it's come back again to sell. So the market starts selling. That's only by that impulsive move. The market goes up again. That's a corrective move. So that's basically what impulsive and corrective move means. If at all you don't know it, all right. So I now discover that the market is attempting to sell, but it's going back up. It's attempting to sell, it's going back up. It's attempting to sell, it's going back up. So in this region, I notice there's more of an interplay between the forces of demand and supply. So this is an important zone. So I pick my sub highlighter. That's what I call this. I call it a sub highlighter. Remember, this is the blue one is drawn in the higher time frame, but this one is majorly drawn in the lower time frame, right? So you can see that the market go to this level, rejected, it broke, retested, came back, retested, came back, retested, and now it's selling. So this is the second reason. The first reason is a trending market. The second reason is that there's a force here that is holding this market from buying. So this market actually wants to sell, right? It actually wants to sell because there's a resistance. There's something resisting the destiny of the market from going up, right? So it does want the market to fall. You must not rise. That's what it's saying. You must fall. So I noticed that here. Now, the next thing I drew was my Fibonacci. Okay, I said, okay, let me draw Fibonacci and see what Fibonacci said. I trade within the 50 and 60% Fibo level. So I pick my Fibonacci. So this is my Fibonacci retracement. I picked it from this high, right? That's a significant high we have in the market. I mean, you don't necessarily take it from the upper level, but this is what is closer to. I mean, there's a significant fall after this level, so that's why I took it a consideration for that level. So I took my Fibo level. Yep. Now you can see that it's in between the 60 and the 50%. This is 0.51. In other words, 51% and 0.668, right? And 60. So 0.50 and 0.61 Fibo level, which is means 60 and 50 Fibonacci level. That's where this is happening. So I have like a confluence region. I have like a confluence region at this important Fibo level. Secondly, there's a market structure called the rising wedge. The rising wedge is just like this. That's my brush. The market is actually selling, for instance. This is selling market, and the market is doing something like this. Something like this. So you can see that you can see that 2 seconds, but I'm not drawing it properly. I don't think I'm drawing it properly. Yeah. Okay, so the rising wedge is something like this. The market sold it, right? Then it's forming like this, coming down, forming like this, coming down, forming like this. But I'm not still getting it properly. I'm not a good artist, right? So the market is coming like this, it's going up, it's falling down, it's going up, it's falling down, right? It's going up, it's falling down, it's going up. So we can see that we have like a flat region here. We can see in this position we have like, so we're expecting the market to continue selling downwards. So because it was actually selling, then you have some form of consolidation which formed the rising wedge. So that's what the rising wedge is basically all about. So I just decided to draw it so we have an example of what it is. So that's the rising wedge that was forming. The second, I have a strategy to which I now make my selling decision. I will draw a counter trend because some people will be buying at this level. Trust me, guys. Some people will be buying at this level. I know what I'm saying. And if you look at the shorter time frame, this might be a lot of buying opportunity for some people. A lot of buying opportunity. Let's go to 4 hours and let's just see for ourselves. A lot of buying opportunity for some people. A lot. I mean, a lot of buying opportunity. Some people that have, you understand, they have different ways they trade. So they can decide that I want to buy in this market, and they decide to buy from here. Of course, they've made over like 57 pips. That's for some trader, that's a lot of money for them based on how they trade. You get that? So I drew the counter trend and I was expecting that I want a bullish, a bearish sell candle, a strong bearish sell candle that will break the counter trend. And once it breaks the counter trend, I'm going to sell. And that was exactly what happened. So the market came and it broke the counter trend, a bearish candle that broke the counter trend, and I took a sell in this trade. I've taken half percentage of my position. What this means is that if I was trading with 5 lot size, I've reduced my lot size to about 2 or about 2.5. That's exactly what it means. So I've taken half percentage of my position. The reason being is because when it gets to 100% retracement level, it's ideal. That's for me. It's ideal under my mentorship or under where I've learned from. It's ideal that you take 50% of your position. If at all the market goes against you, the market starts correcting, you have that 50% that has been saved and added back to your capital base, right? So now the market can decide to sell, of course. Now, this is where I'm going to stop. I don't want to go deep on how I protect or correct or modify my trade. That will be in my course. But for now, this is all I will be sharing here. But you can see my trading decision. Trending market, higher highs, higher lows for bullish market, bearish lower highs, lower lows. And that's what happened here. You can see there's a support and resistance interaction between the forces of demand and supply, resistance level showing there, and also the market structure, which is the rising wedge, and also the Fibo level, which is 50 and 60% Fibo level, and my counter trend break. And of course, I took a sell, and that's exactly what you see here. So let's wait to see if the market is still going to sell down or the market is going to finally correct. But have it in mind that I've actually took 50% of my trade, and I've taken my risks from zero to from before I risked about 3% of my account balance, but now it's 0% risk. So I've broken even. I've moved my stop loss to break even level. So if at all the trade goes against me, I'm not losing anything in this market. Cheers, guys. You watch the video over and over again, and if this has been a blessing to you, please share, subscribe, and also comment so we can take this trading to the next level. I mean, there are a lot of people out there that need stuff like this and are struggling. So you should be a blessing to them by liking, sharing, and also commenting. We have a target of getting to 1 million subscribers. We'll definitely get there. But now let's just increase the volume. Cheers, guys. And this is Mike Talk Finance, the multi-billionaire profitable investor and fund manager. See you again.